Hey, it's Phil McDowell, the Mortgage Professor, coming to you today. And guess what? This week already I've had questions about rent to own. I'm getting questions about rent to own not only from people who don't qualify because of their income, the down payment amount that they've got, or their credit rating, or all of the above, but also from investors holding onto property. They're saying, hey, I'm taking a look at selling my property, don't want to take a capital gain this year. So what I want to do is an actual rent to own so I can defer the transfer of ownership and defer till next year perhaps my profits. Now, how do I do that? Well, rent to own is commonly referred to in this industry now. You're seeing it in Kijiji, you're seeing it in newspaper ads, you're seeing it all over the place. But there are some pitfalls. Pitfalls both for the buyer and for the investor selling. And here's why. First of all, a rent to own, focus on market rents. If within the body of your contract, the person that is taking tenancy of the home with the intent to buy later, if they do not pay market rents, the whole deal is going to collapse when it comes down to getting default insured mortgage approvals. Now, what do we mean by market rents? Well, get an appraiser, get him to confirm what the market rents are. So, for example, if you say, hey, listen, you don't have a down payment, park your butt in my house, pay me $500 for the rent, $1,000 is going to go towards your deposit over time, so $1,500 a month, you're going to own your home before you know it. But that's only if a normal landlord, normal tenant, agrees that $500 is an appropriate rent for this house. Usually not the case. So watch out for your market rent. The other thing is, a rent to own has to have a price. You can't be just an open, here, put $5,000 down, pay $1,500 towards rent, pay another $500, and eventually we'll come to a deal. No, price is set now. So, price is set. There has to be a possession date. So is it a year? Is it 2 years? Is it 18 months? Is it 13 months? But throw a possession date down. Why? A rent to own is a purchase agreement. It's just extended over time. So if you take a look at the normal real estate deal where you see that you've got a price, you've got a possession date, that's all true of rent to own. Now, the difference is, rent to own, we talked about that market rent. Well, here's where the other part is. You'll take a look and you'll see, I call it deposit, additional deposit. Well, like when you make an offer on a home, usually you make an initial deposit, $5,000. You get your financing condition complete. That's when your other money comes down. When you close on the deal, there may be more money involved. But this is where rent-to-owns really tend to screw up on documentation, which makes it frustrating both for the seller and the buyer when it comes to default insurance later on when people qualify because they fix their credit, because they fix their income, and because they've accumulated down payment. These particular additional deposits over and above the rent, do you know what has to be in that contract? If the person cannot buy the home on their possession date, the document has to say that their deposit, their initial deposit, and their additional deposits they're making monthly have to be refundable. If they're not refundable, it's not a purchase agreement. It's not a purchase agreement, because when you do a purchase agreement called a rent to own, what we're saying is someone is willing to buy the house for a certain price by a certain date. They are accumulating money down through the initial deposit and the monthly deposits. If they are not able to obtain their financing by the possession date because their income has not improved, because their credit has not improved, that means, just like when you make an offer on a regular home where you have a condition of financing, and you're not able to meet the financing, any deposit you've made is returned to you. So all of those things have to be treated as a normal purchase agreement. The big difference, of course, is while we're waiting for everything to transpire, there is market rent being paid by the individual who is entering into the purchase agreement with the owner. Got it now? Watch out for your documentation, because if you don't have a refund, if you don't have market rents, no financing in the future under default insurance programs. So watch your money.